This is the future of finance.
This episode is brought to you by Metis Global Partners. Hi, everyone. Welcome to the Future of Finance podcast. I'm George Dyer, and today we have Dorien Nunez on the show. Dorien runs his own firm called Omni Research and is also a senior fellow with us at the Intentional Endowments Network, where he's been a steadfast voice in the importance of addressing discrimination and the lack of diversity in the finance industry. We have a great conversation about Dorien's journey, the opportunity he got at a young age to attend an elite boarding school and how that opened doors for him to get some exposure to Wall Street through internships in high school and later in college to transition from his community organizing work to a job in finance. We talk about the many efforts over the past few decades to address this lack of diversity in finance, as well as the recent anti-woke, anti-DEI backlash and how we might move past it. Dorien's a really interesting mix of a longtime investment professional and in many ways an activist and advocate at heart, pushing for positive change in society. He's a great guy, very positive, very inclusive, and at the same time, no nonsense. And he's got a deep wealth of experience and networks that he brings to this conversation and to his work. So I hope you enjoy the conversation. Please share your thoughts in a comment or review. Be sure to follow and subscribe to the podcast. And now here's Dorien. Hey, Dorien, how you doing? Welcome to the podcast.
I'm doing great. Thank you. I'm up here in chilly Madison, Wisconsin. So I have my winter gear on, my Intentional Endowments Network.
I love it. Nice.
So here we are. Great to be here.
Awesome. Yeah, you're out of your usual climate, huh?
I have 80 degrees down south, so eager to get home.
Yeah, nice. Well, it's great to see you, and thanks for taking the time to join us. We work a lot together. You're a senior fellow with us at IEN, plus a lot of other projects that we'll dive into. But you have now spent 50 years or maybe 51 years now on Wall Street, doing all kinds of things. So we'd love to start by you just telling a little bit about your career and maybe, just tell us, how did you first get interested in finance?
Well, I'm a native New Yorker. I'm an amateur astronomer, and when I was 12, I played saxophone in a Motown cover band. And got paid. So that made me. So my first career ambition was to be a professional musician. But I was very fortunate. I was good at math. I got a scholarship to go away to boarding school, St. Paul's School, Concord, New Hampshire. You're an Exeter guy, and so we're both preppies. And while I was there, the head of the board of trustees was also the CEO of Morgan Guarantee, now J.P. Morgan.
Oh, wow.
And they hired some of us from high school and gave us jobs on Wall Street. My first job was a messenger. I was a messenger at 14 Wall, across the street from the stock exchange. I'd go home at night, watch TV, and they'd say, here's the Dow, this is going to go. I worked there. But my interest in finance was delivering commercial paper. I still remember this day. It was something like July 20th. And I delivered commercial paper, which is paper. Banks loaning money back and forth to companies. For General Electric, I took it to the Federal Reserve of New York, and it said, paid to the bearer on August 10th, $547,000. It's July 20th. I'm a broke kid from New York. I said, whatever this is, I wish I was coming here in August to collect it as opposed to here in July delivering it. And that's why I have an internship program and mentorship program that planted my seed to be interested in finance.
Yeah, nice. And then did you go back to school and study it, or how did the career kind of develop from there?
Yeah, well, when I went to college, I went to Harvard College, which was founded by an alum of St. Paul's. I didn't know it at the time, and I was a sociology major. And I wasn't really that interested in pursuing a career in finance. I took a year off from school, went back home to New York, started working as a community organizer, anti-redlining and picketing them. But before that, I got a job as a commodities broker. I had to find a job. I was broke. Right. I convinced this brokerage firm to hire me at age 19 to be a broker. And I was able to do that because I could say, sure, I know Wall Street. I know commercial paper. I know foreign exchange notes. I know IPOs. I work for Bankers Trust. And they said, okay, kid, we'll give you a shot. And that was my first paying job in the industry, I would say, as a commodities broker, straight commission.
And that was over summers in college, you said?
No, I took a year off.
Oh, right.
Taking a year off after my sophomore year. So that was my sophomore and junior year. So I did that for about 12 months. Then I went back to school with a strong interest in finance, finished up, worked for IBM, selling computers to Wall Street firms back in New York, and then went to business school and pursued my MBA. By being a commodities broker, I got the bug to become a portfolio manager. I was tired of calling people on the phone and trying to convince them to do what I thought they should do. And I figured as a portfolio manager, I could have a fund or work for a fund, and I could just execute these brilliant ideas that I thought I had about investing in the commodities, at that time, the commodities market or the stock market.
Mm-hmm. Once you kind of broke in and had those internships and that first job, was it kind of easy from there, or were there other like kind of points along the career where there were mentors or people that helped that, were instrumental in?
Well, number one, it's never easy. And we tell people the hardest job is your first job. I was lucky that my first job was at 15. My first broker job was at 19. So that helped facilitate things and move things further ahead. But I had a lot of mentors over the years, a lot of them. And I'm very grateful to all of them. They're too numerous to name, but that's why I have my own Wall Street Advantage mentorship program, because I know that I was mentored. And I believe in internships. Got an internship, a fellowship when I was at in business school, which helped me pay the way to get through my second year of my MBA as well. So strong believer in both of those, believe in mentorship, participate in.
Did the mentors come mostly from like the jobs you had or the school networks, or?
Great question. A combination of the two. What I would call my first mentor was the father of a high school classmate of mine, who was an executive at a bank in Chicago. He later became Harold Washington's finance chair. His name was Walter Clark. And I was just with his son, my friend, Hilton Clark. And so he helped me get an interview at his bank. So I'm walking around with him after the interview, and he points to the computer room. And in the computer room, there are these big mainframe computers. He says, boy, if you could get into that part of the business, we're rewriting the pay scales to pay for the people who are operating computers. That's the future of the industry. And I went, okay. I had no interest in computers. A week later at Harvard College, I get an interview with IBM in the banking office, all about selling computers. So that piece of advice from him perked my interest to the point that when I was sitting in with IBM, I said, let me pay attention to what they're saying. And I ended up getting an internship with IBM selling computers, and that helped propel things as well. So it's relationships. It's all, one thing leads to another. Talk to enough people about enough stuff and pay attention. And when you get signals, act on it in some fashion. A lot of people don't act on the signals that they're given. Act on it.
Yeah. Well, like you said, I mean, so much of it is about relationships. And, I want to talk a little bit because we do a lot of work with you around diversity in the asset management industry. And as we're sort of just naturally alluding to here, a lot of that comes from networks from great schools and other things that not everybody has access to.
Right.
And, if you can catch a break and get into those networks, that can obviously really help. But I'm curious, so how did that experience, or when did you really start kind of focusing in on this whole issue around diversity or the lack of diversity in the investment industry?
Yeah. A couple of things happened. One, because I took a year off from school and I was a community organizer around redlining, I learned that banks were not making loans in my neighborhood. So that sort of sensitized me. When I got back to Harvard as an undergrad, there was this guy who was in jail in South Africa, and we were all picketing to get him released. And I never heard of him, but it's called Nelson Mandela. And so we were picketing. So that started the whole divestiture movement, and I was part of that. So that made me focus a lot on what's going on in the investment industry as a whole, and social issues that revolved around it. I met a woman that Joan Bavaria, who started Cirrus and had a firm, Franklin Research, which is now Trillium. And that showed me that my investment interests and my social values could overlap and operate effectively. She was talking about South Africa free funds. But what really
did she come speak at Harvard? Is that how you met her?
She did. She came and spoke at Harvard Business School, and the light bulb went off for me. It was like, yes, I could be socially conscious and investment focused at the same time. And that was a truly light bulb moment. As you know, she's a legend in the industry. in so many ways. And I always try to sing her praises and the praises of her firm and other things like that. But I'll tell you, George, what really did it was when I was graduating from Harvard Business School and I went and interviewed down on Wall Street. And I've never talked about this before, rarely. I went and interviewed down on Wall Street and I encountered some less than polite interviewers and ended up filing an EEOC complaint, which was sustained 2 years later. So that was stressful and traumatic, but challenging.
I bet.
But I did it. And then I encountered an organization called NASP, National Association of Securities Professionals, founded by Maynard Jackson, the former mayor of Atlanta. So my personal orientation plus my personal experience, and I felt like if I could run into these barriers with an MBA from Harvard Business School, an undergraduate degree from Harvard College, my Wall Street experience, what about the guy who's just at Baruch College or Boston College trying to break into the industry? And I felt an obligation to start to become active in promoting diversity in the industry.
Yeah, that's amazing. And what do you think? I mean, now you've been working at this for a long time, and you mentioned NASP. There's all kinds of other groups that have been working to address this over the years, and I know you've been involved with a lot of them. And I guess, why do you think it is so hard to change this and to kind of get the industry to open up a bit?
Yeah. Well, on one hand, you've got the traditional industry, and ESG is kind of like this too, right? You've got the traditional legacy industry that it's been elitist and it's been very focused on the fact I went to St. Paul's didn't matter. So I was an elitist too, but it didn't matter. And so the traditional industry is insensitive to it. It's in denial about it. And just like it's in denial about climate change and everything else. So there's no surprise about it. That's why it's been hard. And then the second part is not enough of us who do care about the subject are as well structured, well organized, and as good at marketing and getting our message across as others are. Environmentalists, we used to be called tree huggers. Remember that? And so even though we were really trying to save the planet and sound, anybody who did reinvestment, community reinvestment, redline, and talked about redlining, we were called socialists and communists. And those people who talk about diversity, that's called reverse discrimination. So the traditional landscape does a better job of mislabeling and focusing its energy and efforts against us. We're fighting uphill, but the magic of what we do is we're still fighting. We're still fighting.
Yeah. What do you think, after many years kind of working on these issues, what do you think holds the most promise in terms of solutions? Is it making the case? Is it legal strategies? Is it just, people from diverse backgrounds being successful, starting their own firms, breaking through and building their own networks? Or what do you think?
Well, I think it's all of the above. And, but the thing that I'm most excited about is the industry is changing. Let me give you 3 examples. The hardest job to get on Wall Street, your first job. In order to get a brokerage job in the old days, you had to have a firm sponsor you to get your brokerage license. Well, now you can take this exam for less than $100 called the SIE, Securities Industry Essential. So anyone 18 and over who wants to get into the industry just takes the SIE exam, and that gets you into the industry, gets you started. And so we've been preaching to colleges and others and any young people who will listen, you want to get into business, take the SIE exam. It's under $100, go take it. If you want to go into wealth management, take the Series 65. That's under $200. And you don't need a sponsor. You just have to do it. So that is an easy avenue to get into the industry. And then the CFA Institute has finally come around. They've issued this DEI guidelines, and they're global. They're doing it in Asia. They're doing it in Europe. So the CFA Institute, Chartered Financial Analyst Institute, which is supposed to be the highest ranking and most sophisticated financial advisors in the world. I got mine 40 years ago, so I'll accept that. I'll accept that endorsement. That they're out promoting DEI, and there are 250 companies roughly that are signed on to these saying that they're going to do stuff to be inclusive, and they also have an ESG program. So now, instead of being the outliers that we used to be, and the crazy tree huggers that we were, there's an entire curriculum being taught to professionals a CFA ESG and a CFA DEI guidelines that's available, but not enough universities are teaching it. The 230 universities that are CFA affiliated universities, but they're not really being required to take a look at the DEI guidelines or the ESG guidelines. So one of my hopes for next year as IEN Senior Fellow is to better promote within the university endowments that we have and also outside to bring this together and coordinate this and scale up this particular effort. So that's the short answer.
Yeah, no, it has been great to see the CFA and other like really established organizations take this on. I think, they see the data and they see the financial benefit, why these issues are material. But also, I think it's been part of this big backlash that we've been seeing. What do you make of that? I mean, I'm imagining you're not too surprised by it, but what do you think? How's it impacting the field?
Well, for those of us who saw the Reagan administration, when there was a backlash then, we say this too shall pass. On the other hand, this time it's much more aggressive and harder. And so we have to stay more vigilant. The difference is there are more of us out here, like the CFA Institute, ESG. You can see what's happening overseas, which is ignoring some of the noise. The pushback isn't as great, but it is there. And this too shall pass. So to younger people, stay vigilant. To us older folks, experienced folks, stay involved and engaged and communicate more. There are more of us now than there were then. And if we keep doing it. When the state of Oklahoma's pension board stands up and says, we will not be bullied about ESG and other things, that's a sign. That's a sign that good people are paying attention to what's going on.
Yeah. Yeah. And so, I mean, do you think that's the best we can do right now is just keep making the case, communicating better? I mean, I feel like this whole concept, it seems so wild to me, but, it's been really effective in getting people thinking that any effort around DEI or improving diversity in these areas is about like reverse discrimination. And when really it's about, ending discrimination or, correcting the discrimination that's been going on for years and creating a fair system. And I mean, I think there's this mentality that it's like it's a zero-sum game. If someone else is benefiting, I'm losing kind of thing, where I feel like we see the ability to bring more people, more talent into these systems is just going to improve the economy for everybody. But how do we make that case?
Well, you and I are trying to use logic in an illogical world. And so, but we have to make that case on one hand, but then we also have to communicate the benefits, on the other hand. Citibank did a study that showed that racism cost the U.S. economy $16 trillion. $16 trillion. Mm-hmm. So this isn't the NAACP, and it's not other groups that I've been part of and making the case. That's Citibank, the head of economics there. So you would think that somebody would go, oh, wow, let's fix this. Let's focus on this. But not really. That's not happening. So we have to make the case on one hand, and we have to empower those who are vocal, and it's mostly younger people. And it's podcasts like this and using digital media and just be as omnipresent as they are, as the other side is with misinformation, and call them out. I'm a native New Yorker. We don't mind calling people out. Call them out when they're just wrong and dumb. And as Forrest Gump used to say, stupid is as stupid does. So point that out. That's what I think we got to fight on all fronts. But there's a legal fight that has to happen too. And there's certainly a legislative fight, and that has to happen as well. So if everybody fights to the best of their ability, and stays focused on it, stay the course, we'll win in the end. We're on the right side of this particular effort.
Yeah. And talk a little bit about how, obviously this is a dynamic that's playing out across society and has been for the whole history of the United States. But what do you see as the important kind of unique factors of the finance industry as a particularly important kind of area to be driving this kind of change? I mean, obviously there's money there, which can help address the wealth gap, right?
Right. And here's the short answer. America is a capitalist society. So because we're capitalists and we're a capitalist society, then the closer you engage capitalism, then you're further integrated into systemic change of society. So that's where I believe the primary focus, not the only focus, but the primary focus should be is how can we impact capitalism with our spending habits, with our investment habits, with our investment allocation habits by large groups like public pension funds and endowments and others. The closer you are to finance the source of America growth and impact that, then the ripple effect will take place throughout. So finance is the place that most of the energy, not all, but most of the energy from our perspective needs to be focused.
Yeah. Yeah. Makes sense. Well, we've kind of alluded to a few of them, but you are involved with so many projects and groups and affiliations. You've got your own shop, Omni Research. So maybe just tell us a little bit about what that is, and then maybe list off some of the projects or groups that you're working with right now.
Well, thanks. Well, I created Omni Research, my own firm. Omni means everything. So research, we like to do research. So we'll research almost anything, but that's why we called it all things. We consult the pension funds, hedge funds, money managers, entrepreneurs, and lately, I'm happy to say, we've shifted more into what I'll call ESG, woke capitalism. I believe in that. We have a research product called Woke. And we're working in that area. So we've become economic and investment advocates, not on purpose, but we've evolved in that direction, and that's what we do. The latest research that I'm focused on is bridging the racial wealth gap. I'm actually close to having a book out called How to Bridge the Racial Wealth Gap in One Generation, because I think I've researched enough different ways to doing it that it can be done, and focused on how to reallocate capital in a way that's inclusive. But we also help entrepreneurs raise money. We help funds raise money, and I do as much work with IEN as possible because I'm very proud of the organization and happy to be part of it.
Yeah, nice. Let's kind of talk through some of them. Well, first, I'm curious, you mentioned the woke capital stuff and, just the language here. Obviously, that word has been tried to be weaponized and sort of used against the communities that started it and defined it.
Yep.
But it sounds like you feel, just taking ownership and pride in that is the way to push back and break through kind of the nonsense around that word.
Yeah, I'm good. Yeah, brought that up. I discovered that the idea of woke came from Negro mine workers in West Virginia when they started learning about economic activity. And the direct quote that I read was, "We used to be asleep, but now we're woke, and we're not going back there again." So I embrace that culturally and say, yeah, there's nothing wrong with being woke. What's the opposite? You're either a zombie or you're asleep or you're dead. So I'd rather be woke than not. At the same time, I accept the fact, it took a little while, but I accept the fact that people have to rebrand and rethink, and you meet people where they are. So a rose by any other name will smell just as sweet. So if we're focused on the mission and the goals, then you can call it anything, you can, whatever one chooses to call it, go right ahead.
I think it's important to call that out though, and just sort of see where that, some of this language comes from and what it means to have this whole anti-woke campaign. I mean, from that origin story, it's sort of saying we want these populations to be ignorant of their, opportunity and keep this power imbalance, which is, I don't know, if groups are explicitly pushing for that, obviously we have a real problem.
Yeah, it's disturbing, but look, we live in the country we live in, and we have a history of challenges, and the future is going to have other challenges, in my view. But that doesn't mean that those of us who are woke should step back. I would say the word that gets used a lot is resilient. So we should be resilient. We should be, if we could sing as loud as a Mormon tabernacle choir, I think our voices would drown out the other voices of what I call ignorance and despair.
Yeah. Well, it just always amazes me how powerful those kind of media campaigns and that kind of propaganda can be and get people thinking, getting sort of triggered by these words and stuff. It's It's amazing. So I think it's important to, keep pushing back.
That's why I'm glad you're doing these podcasts. I think this is special, and I think the more people who do them and the more we come together and promote them, our voices will end up getting heard.
Mm-hmm. Yeah. And I'm curious your thoughts on this too, because on the flip side, I do think it's important to recognize that some of the efforts around DEI that, maybe people point to a lot where there was, hires that maybe weren't qualified for roles, or just companies that sort of rushed to implement some of these policies that weren't very well thought out. And I think that had a role in kind of painting the whole movement or this whole conversation with a bad brush. I feel like that's a very small minority of the instances, but those often get all the attention and can kind of taint people's views of what the work really is about.
Well, let me react to that. And we did a podcast about this, about how the business community implemented DEI wrong. And if you step back and you say, well, who were those decision makers? Those decision makers were demographically, my undergrad's in sociology, right? So we'll talk demographics. So demographically, you had mostly white male managers, power figures, trying to make the decisions about how to implement DEI. And they did it poorly, either because one could say they wanted to self-destruct, but the others, they just didn't know how to do it. And so anybody who had a less than qualified hire, who made the hiring decision? No one in the quote DEI world ever says sacrifice returns on investments, sacrifice quality on people, or anything like that. I've never heard that. Hire somebody underqualified to do the job. We've never said that. So somebody at the top thinking that they were doing the right thing but doing it the wrong way, they're the ones who are doing it. Or they hired what I'm going to call social anthropologists inside the business tent. And the social anthropologists started doing some things that were very good for social anthropology, but didn't fit in a business environment. And therefore turned off a lot of people and got them wrong.
And that's what's going to happen, I think, with any sort of big change. Obviously, this is big long-term change that, has its moments of acceleration and reversal and everything. So it's not surprising, but I think it's just important to sort of recognize that there's some real stories there that can, then be amplified and taken out of context and misrepresented to sort of paint the whole field or the whole effort in a negative light. And I think it's important to just say what you just said, that, I think we have an understanding of what this work is about, but we don't always articulate it, and so that people can, misunderstand what it's all about.
Right. So we need a national network. We need our own version of Fox News, and we need to be consistent with message and not dilute message, and find the really vocal, forceful and energetic, passionate, whatever term you want to use, to get out there and be persistent over 10, 15, 20 years. Look how long they fought to reverse Roe versus Wade, right? So they were relentless over an extended period of time, and we have to be equally vigilant and relentless, in my humble opinion.
Mm-hmm. Mm-hmm. This episode is made possible by Metis Global Partners, a global equity solutions provider managing over $5 billion. Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients, including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's metisgp.com, or email info@metisgp.com. So let's talk about some of the more specific projects. You mentioned the mentorship work that you do. Tell us a little bit more about that. How's that structured and what's it look like?
Well, because I've been a beneficiary of internships and mentorship, I created something we call it Wall Street Advantage. How the average person who doesn't have the elite access and things of that nature can get the Wall Street Advantage. I started it years ago when a pension trustee said to me, why don't I see more African-American and Latino people in the industry? And I said, well, I could do something. I could do a little something about it. And so now it's grown. We've placed people at Goldman Sachs, Fidelity, lots of places. We've supported IEN efforts. And we've been recognized by the SEC as well as NASDAQ for what we do. And we support other mentorship programs. I personally am involved in about 4 or 5 mentorship programs, but we recruit others to get engaged and involved as well. And we help young people get their first job by building their resumes, telling them what they need to do. No one tells them, go get a Bloomberg certification, go learn this, go learn that. We give a direct curriculum on how what they should study so they could be investment literate when they go into a meeting and an interview and stand out from the others who have had that advantage. And we go all the way from high school, actually earlier, but we go all the way from high school all the way up to even to the boardroom. I mentor people. I'm on the board of a company called Good Unite Us, and we help people get board service as well, professional boards.
Mm-hmm. Mm-hmm. Have you over time sort of noticed trends in terms of once kids kind of are made aware of this industry or this kind of career path opportunity? Is the interest strong? Has it been growing? Is it ebb and flow? What's that look like?
I see it growing.
Mm-hmm.
I'm amazed how many that a lot of these internship programs and mentorship programs are out there now, and they oversubscribe, and there are hundreds, maybe not enough, but there are hundreds of young people who are taking finance. They're in the investment club at their university. They're managing a student portfolio, and they're all trying to figure out, how do I break into the industry? Not enough information is told to them specifically what I think they should do, the stepping stones I just kind of mentioned here. But the interest is out there. Their interest is out there. It's very exciting to see this happen. Well, you know, from the Silk program that we have at IEN, the interest is there. It's how do you sustain it and keep it going and staff it up and run with it to make it all happen.
Yeah. And this, for folks who don't know, the Silk Network is a part of IEN, and it's a group of student-managed investment funds at colleges that we help connect and have mentorship and networking and educational services. But it is good. I mean, I think that interest is strong. I think, obviously people talk about this interest in sustainability amongst young people. And I think at the same time, they want to see a path to build a career and be successful. And I think, as you were talking about earlier, recognize the important role that the finance industry and capitalism plays in creating that sustainable future. And so, yeah, hopefully they keep getting involved and can help build these better systems we need. So what else? Any other of your projects that you want to touch on or dive into?
Well, as you said, there's so many. So I'll mention 2 things. One is a group called IDAC, which is Investment Diversity Advisory Council, which brings together the pension consultants, asset managers, and others. IEN is a member of that. And that's why I have hope, because I've seen the industry respond. We need to scale it up, but the industry is active. And we just held our conference in San Antonio, and next year we'll be in California. And so this is another new group. What makes it so unique is that the consultants have done it. Years ago, we were trying to break through the door to the consultants, get them to listen. Now we have consultants who are part of this particular effort. So it's an umbrella group that's led by Sam Austin from NEPC. NEPC is a member of IEM. And so that's super encouraging. I'm on the board of Good Unite Us, a company that has a free app, goodunitus.com. And I won't jump too much on the commercial side, but we've got a free app where you can actually see your purchases and see what companies, what political issues the companies that you purchase support. So you can't be an activist Monday through Friday, and then on Saturday, you're spending the money with somebody who's against everything that you care about. You could say, I didn't know, but with Good Unite Us, you will know. And we've got another product that allows you to look under the covers of your mutual fund and see how they go. And we have an ETF. The ticker is DEMS, DEMZ, which is traded on NASDAQ. We've been around 5 years, $50 million, and we've outperformed the S&P. It's the S&P without the GOP. There are lots of index funds that have beaten the S&P 500 by being tilted towards environment or tilted towards agriculture, regenerative agriculture, of number of social causes and issues. And many of them are members of IEN, I'm happy to say. And those voices, but they're all tiny, except for a few, but they're not big enough. So they, again, need to be lifted up and amplified. And, the thing I'm really most excited about, George, is this other effort called 10 Million Names. that I
What's
got
that?
pulled into. It's run by the American Ancestry, which it goes back. It's based in Boston on Newbury Street, and they research the Mayflower and they help people do genealogy. 10 million names is researching the original 10 million Africans who were enslaved here in America. And so it allows you to go all the way back. Skip Gates from Harvard University is behind it. It's a Skip Gates building on Newbury Street. And they've already identified 1 million of those names. And I've been pulled into helping spread the word, promote the word, and helping expand that so that people of African-American descent and others who care about the subject and issue can actually go back and reconstruct through church records, property records. It's a lot of hard work, but the data exists. AI makes it useful and able to reconstruct these things. And it's very compelling and exciting. It's pretty special project. So
Yeah, that is very cool. And I think, not just African Americans, but any American, all this history is such a part of all of us. Speaking of that, have you watched The American Revolution yet? Have you started checking out Ken Burns' new documentary or heard about it?
I've heard about it. I watched some of it. And I need to do it. I'm not ready yet I will next year, but I'm not ready yet to dive into. I'm still getting my arms around this other stuff. I'm busy watching, George, Future Finance podcast. So
There you go. Yes. Gotta get caught up on that first.
No,
I just
started watching the first of these. There's some large number, I think.
Yeah.
The videos.
Yeah, we're over 40, I think. And we just got our 100th video up on YouTube, so people definitely check it out. But no, I started diving into the American Revolution documentary, and I think it's great. I mean, it's obviously that story we all know pretty well, but they bring in a lot of new elements and details and stuff, and it had been a while since I'd really taken a deep dive on it, so it's interesting. But I think he does a good job in, integrating and taking a real objective look at the role of all these dynamics around slavery, Africans in the colonies, Native Americans, the different Native American nations, and how all of those factors interplayed around the revolution as opposed to just sort of the one kind of founding father centric view.
Well, I have to add it to my list of things to do right away. Thanks for that's
a good one.
Good to know. Well, he is a fantastic, Ken Burns. That's he's fantastic at his ability to tell stories and dive deep into it.
Yeah. I want to come back to IDAC for a second, though, because, I think you're totally right. The consultant role has, I think, really changed. That's been really encouraging. I think in some ways, they found themselves just kind of stuck in the middle of different asset owners demanding different things. And I think they have a really important role to play in saying sort of, okay, how can we serve the needs of all of our clients, but also look at really what's material and, going to lead to better investment decisions. So it's really great they're taking that leadership role. But it made me think too of just the emerging manager programs that have been around for so long, and love your thoughts on just that model in general. Do you think it is effective? Do you think it can be effective? Do you think it's flawed? What are your thoughts?
Well, I've been part of that movement from the very beginning of emerging managers. One of my mentors, Mark Skazanoff, who created Progress Investment Management, used to say, we like to say entrepreneurial managers. And because they're startups, they're younger, they're fresher, they're newer, and we want to avoid the demographic backlash that some people have. And there's nothing wrong with emerging manager programs. The United States, I've taught finance and business. The United States has had a small business program for suppliers since World War I. And it recognized that we have to have small businesses involved and engaged. We have to make sure that the big companies don't just dominate and crush the little companies. We have the SBA. That was existed since 1958 because we realized that small businesses are the future, the lifeblood, and everything else. The investment industry has avoided that and has not been brought into mentor-protege programs, which exist in the Department of Defense and NASA. So if we can have small and emerging and minority and women businesses send people to Mars or send rocket ships up or create bombs, certainly they could figure out a way to invest in the stock market, the bond market, and the other markets. So the backlash against emerging manager programs is strongly misguided in many, many ways. the way we implemented it in Ohio years ago was we made it entrepreneurial. So it was local managers, regardless of race or ethnicity, plus overlooked groups like women and minority managers collectively in a group. And that, I think, is, I hope to see as the way to grow and expand it, so that it's more inclusive as an emerging manager program, as well. And then you have less people arguing against it, and to being involved in doing it. So I'm a proponent of it. Until somebody, like Winston Churchill said, somebody has to come up with a better idea. So if you can come up with a better idea, I'm waiting to hear it. Mentor protege is something that is going to start to happen. The New York City Pension Fund is starting to do it, where you tell the big guys, why don't you adopt the little guy, and why don't you figure out how to help them grow so they too can become a big guy somewhere down the road. That would be, when the asset owners start making the requests, then the consultants and others will react.
Absolutely. Nice. Well, Dorien, this has been great. I got a few final questions I like to ask, some quick takes, and then our final two. But first, these days, what do you like to do outside of work? You still playing music? And
I don't play enough. I don't play enough. That's one thing. I have to get a saxophone that doesn't make noise because my dogs all start howling when I practice. So that's sort of the next thing I'm doing. But I listen to music. I watch my Motown music, obviously. I'm on YouTube a lot. I like watching my old neighborhood in Brooklyn, the new videos that they have of them. So I take tours of my old neighborhood to see how it's changed over the years.
Oh, yeah.
That's
cool.
Yeah, I still follow astronomy. There's a group called SLOOH, SLOOH.com. So you can actually control robotic telescopes without having to go outside and freeze and take pictures of the stars. So I do that a lot. So that's kind of, and I'm reading more now. Finding great, exciting things, interesting things to read.
Nice. So that was my next question. Do you have a book or a podcast, article, resource that you want to recommend?
Well, I have to check out the podcast I recommend, George.
Thank you, Darren.
But for those of you who care about sustainability, go to the CFA Institute website and look at the ESG curriculum. There are different levels, different prices, and if you don't want to sign up for it, go to your finance professor and say, why aren't you teaching this? And let them find a way to teach it, incorporate it there. That would be the resource that I would strongly recommend. The two books I'm going to recommend. One, and I am going to do a shameless plug here. One is by Robert Smith, the billionaire, who is called Lead Boldly. It's his book. It's speeches of Martin Luther King with his insights from his own career. And he mentions a lot about things, prescriptions and things that we need to do for that. And this is my new favorite book, Memoirs of an Accidental Abolitionist. This is a woman in Louisiana, since I now live in New Orleans, who during Katrina was trying to help Black families, make it through Katrina. And it's her story about the racism that she encountered and how hard it was for her to do it. And she's still vigilant about it. And I've started communicating with her. And she's a brave warrior. So both of those books are on Amazon. You'll hear more about it from me. And that's kind of what I'm doing. But the people in the industry, it's go look at the ESG curriculum that's at the CFA Institute.
CFA.
And try to get your university to embrace it.
Love it. Nice. What about the best career advice that you've ever gotten?
Man, there's so many of those. It's hard to say. I mentioned one of them when Walter Clark told me, if you could get into those computers, we're rewriting the pay scales for that. At IBM, we had an expression, everyone sells. So that's all of us do, whether we think about it or believe that. We're all representing something. So everyone sells. Persistence pays off. I could, don't quit. I could give you, we have a list of these that we have, and we should share them with some of the interns after a while. But that's kind of, just stay at it. Here's one. If you find something that works, keep doing it. Play that one note. That was a one that a guy was sitting in my kitchen, and he shared that with me. He said, you keep playing that note till it goes out of tune. And so whatever it happens to be, I'm mindful of that as well.
Yeah, nice. I'm just curious on the advice you got around computers back in the day. What are your thoughts on AI now and how people should be addressing or engaging with AI in this industry?
Two thoughts. In data processing, we used to say garbage in means garbage out. I go.
Mhm.
And at NASDAQ, at an AI conference, I say, well, what about bimbo? Bias in means bias out. So we should be leery of AI. When GPS first came around, it was telling people to drive into lakes and off bridges. So the technology is not flawless. And so,
Mhm.
unfortunately, people embrace technology and think it's fantastic. It's not. It gets to be fantastic, but it's not, especially when it first comes out. So AI can do a lot of things well. There's some things that are easy to do that it could do well, but don't grab it. I think we're doing responsible AI within IEN and defining what that means and being engaged and involved. We have to be vigilant and stay on top of it. The environmental catastrophe disaster it's going to create, as well as bias and biased decisions and things of that nature.
Yeah, for sure.
Oh, but I'm sorry, but let me finish though. But however, if you're in the investment industry or any industry, you have to embrace AI. If you're not using it, embracing it, knowledgeable of it, or understanding it, you're only hurting yourself. You're going to get left behind. So jump aboard.
Yeah.
Just don't drink all the Kool-Aid and be vigilant and resilient and help it to be more responsible.
Yeah. Perfect. What about business education? What do you think needs to change there in terms of some of these issues?
Well, I call it business miseducation. And here's why. If you really, and I've been an adjunct professor at four universities, so I've taught this, and I say this a lot. Number one, Peter Drucker used to say, and he's known in business, that culture trumps strategy any day of the week. And yet, what does business schools teach? They teach strategy and they ignore culture. So by definition, they're off base right there. One of the best things I learned at Harvard Business School was the 7S model from McKinsey, which starts with system, strategy, structure, skills, staff, and shared values. And I missed something. But what gets taught? People talk about strategy, they talk about systems, they talk about organizational structure, but they don't talk about shared values. But this is McKinsey, and well known. So why do we not talk about shared values? Michael Porter, another well-known business educator, one of the most prolific ones that I studied with at Harvard Business School, he has a shared value institute that talks about it. But people talk about his 5 forces, but they don't talk about the shared values. So in my mind, business miseducates because it ignores the fundamental foundation of business education, which is culture, values, getting along with people. We say people are our most important resource, but then we don't treat them with respect and dignity. And so as a result, it's really taught improperly. Thank you for the soapbox to make that particular case. And I've drafted some stuff about this, which someday I'll write and put out there. But that's what's wrong with business education.
Yeah, gotcha. How about on the policy and law side? If there's one change you could make there, the snap of your fingers, what would that be?
When I was in the 2nd grade, we used to have a Christmas club. So you came to school, you put your money in an envelope, and the Roosevelt Savings Bank in Brooklyn, New York, would take your money, and they would put it in a Christmas savings account. You got your passbook that stamped it, and then you would at Christmas time you get your money back, and you would buy Christmas presents. So if there was one thing, I would say starting in the 2nd or 3rd grade, every kid should get a brokerage account. It costs zero money to do it, so I don't know why Fidelity and Schwab and all these other big firms aren't just massively going into especially the public school system, because now the poor kids are in the public school system and people who have means have all gone to private schools. Start them out with an account with fractional shares, ETFs. You can just put a little bit of money in. If I'd known that my shopping cart, carrying shopping carts around, helping ladies with their shopping cart, I could take the money and buy comic books, go to the movies, give my mother a present, and also put money into an ETF or a fractional share of a business at age 9, 10, 11, or 12. Think how you could change the country. And you have to teach the teachers first to do it. And that would be the one thing that I would focus on.
Mm-hmm. I love it. Nice. What's one easy thing that you wish every investor would do right away? Institutional investors.
Well, I'm going to give you two. Institutional individuals, there's a difference.
There is. I was thinking institutional, but you can go individual if you want.
Well, for individual, spend $2 and subscribe to AAII.com, American Association of Individual Investors. It's $2 for a trial, and you'll just get free stuff and you'll learn about investing. And then you can also download our app, goodunitas.com. And so then you'll see where your dollars are going as you buy things, and index online as well. Institutional investors, pay attention to your underlying asset providers. Public pension funds are doing redlining. And I know this is quick takes, but I got to say this. They're redlining. Individuals put their money into the pension fund, and they believe in ESG, they believe in inclusion, they believe in DEI, and then those who manage the money say, nope, we're not going to incorporate that into the decision-making process. We're going to do what we want to do. We're not going to do affordable housing. We're going to do luxury condos in Monaco because we can get a higher return there. And so what institutional investors need to do is listen more to the asset owners, but the asset owners need to bone up and pay attention to what their asset managers are doing. You go to a public pension fund board meeting, nobody's there. Nobody's there. And yet it's their money that's getting invested and decisions are being made about it. That's, hopefully I answered the question.
Absolutely. Nice. Well, Dorien, what's your vision for the future of finance to make some of these goals a reality?
Well, I think if technology is going to make it easier for us to communicate, young people care about this. You look at George Floyd, I got inspired by George Floyd, the reaction to it. You had international people, you had interracial, you had intergenerational, all coming together. And that motivated me to get more active instead of less active. And so when that awakening becomes an economic awakening, when they realize that they have purchasing power, your vote doesn't count, but your political vote is diminished, but your economic vote, your investment vote, and your shareholder vote is still out there. So when that becomes aggregated and people become aware of that and they act on that, I think we're going to have another new wave revolution that will be socially conscious, but also fiscally rewarded, financially rewarded.
Nice. Awesome. And then the final question we always ask, you've kind of already addressed some of this, but what specific advice would you give to young people or college students looking to get into this field right now?
Yep. SIE exam. Go talk to your professor to see if your school is CFA affiliated. If it isn't, say, why not? It's only filling out paper. It doesn't cost any money. And then if they are affiliated, then make sure you look at the DEI and the ESG curriculum and make sure that that's integrated in there. The second thing, open an account, start investing early. We taught 15-year-olds, we had them with their parents at the Essence Festival. And we said to the parents, if your children could be a millionaire by the time they're your age, would you help them do it? They all said yes. And we told the children, if you could be a millionaire by the time you're at your parents' age, would you do it? Yes. Well, $150 a month at age 15 becomes $1 million at a standard return of 9-10% when you're 40. And with fractional shares and ETFs and mutual funds, it's all doable today like it wasn't done yesterday. So get started now, get started early, and contact IEN if you need more information about it. That's what you should do.
I love it. Dorien, well, this has been great. Thanks so much for taking the time to chat with us today. And thanks for all your work. Look forward to staying in touch.
It's a pleasure. Talk to you soon. Happy holidays.
You too. Take care. This episode has been brought to you by Metis Global Partners. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow.
A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.